So as we're approaching 2023, I'm doing many videos talking about some trade ideas and talking about if they're really going to outperform or underperform in my opinion in 2023. And many of you liked my video on why I believe Michael Burry could actually go long treasuries in 2023. So I decided to do one on oil and energy stocks as they were the outperformers of 2022. And many of you are wondering how can they actually, do in 2023? Can they keep outperforming or underperforming? And again, because oil stocks were so popular in 2022, just like most investments when they really outperform, there is rarely any bearish case on such an asset. For example, all the time I keep hearing about oil stocks and energy, that about the bullish case, which is low supply, ESG, strategic petroleum reserve. President Biden's gonna fill it up at 90 or at 60 or $65 per share. So there's pretty much no bearish case for energy, and no one is really talking about it. And whenever I decide to make an investment, I always look at the bullish case and the bearish case before I make my decision. Just like I did with Google, I said Google is a buy at $90 or under if this is the bullish case. But if it's the bearish case, which maybe ad spending could actually be down in 2023 going for the next 2 or 3 years and really underperform, Google would be more a buy around $70 per share. But of course, I got the narrow-headed retail investors, saying in the comments, yes, whenever Google goes to 70, then you say it's gonna be buy at 40 or 50. Which is, ridiculous, and it just shows you how narrow-headed retail investors are. They only want to be bullish, and they only focus on one side, and they wonder why they even lose money. So again, I decided to do this bearish case on energy stocks if some of you are actually looking to buy into energy, or if maybe you own a huge percentage of your portfolio in energy stocks and are wondering, is this maybe the end of it, or it could, what could happen in 2023? Now, I have to say before I start that I am not bearish on energy stocks. I'm not against oil and gas. I was making videos in 2020 and in 2021 about buying ExxonMobil and Royal Dutch Shell because I believe they were pretty undervalued, especially to the price of oil historically. And then in 2022, I made a video talking about the stock TPL, Texas Pacific Lands. Many of you remember it, and the stock is up over 150% since I did this video. So I am not against oil or energy stocks, but I'm trying to lay out a potential bearish case where oil stocks could actually underperform and why you should not be surprised about it. Okay, so I hope you enjoy this video. Now I'm gonna go back to 2008, and again, I'm gonna get pushback on this as usual. Oil went down 78%, closer to 80%. 80% move in just a couple of months. Now, many of you wonder, how has this even happened? Now, the main argument is that you cannot compare it to 2008 because in 2008, there was much more supply dynamics and stuff like that. And I 100% agree. But there was not 80% more supply, or there was not 80% demand destruction in the financial crisis. But why did oil go down 80%? Very few people, I'm sure, will not even be able to see it just looking at fundamentals, just like people were doing with ZIM. They were looking at the fundamentals and they were saying ZIM should be at trading 10 to 15 PE and looking at how amazing the dividend is. And I was saying all the time since ZIM was 65 or 70 that it's a $20 stock. And then you had the freight index of the shipping rates and stuff absolutely collapsed. And again, people looking at fundamentals, they could not even see it. So you may ask, if we don't look at fundamentals, what should we look at? Well, in my opinion, with commodities, fundamentals win in the long term if the fundamentals stay the same. But in the short term, expectations are the winners. Expectations move them. Expectations of lower demand brought down oil 80%. This is not because demand fell down 80% or anything fundamentally changed, but the expectations of that made oil fall 20%. Just like expectations made oil go to $125 or $130. It was not just based on fundamentals. You have fundamentals and you have expectations, and they play a big role with energy stocks. And again, looking at the shipping rates, and I think you can agree with me, there is no way in the world This was all 100% fundamentals. It had a lot of expectations of the supply chain issues and more demand fueled by stimulus checks and stuff. Yes, the demand was there. And yes, the supply chain issue was there. But it was not, such a magnitude to fuel such a move. And how did it change so quickly? Well, this is because of expectations of lower demand and expectations of, the recession in 2022, or a much severe one, in my opinion, in 2023. But this is a prime example of what happens between reality and expectations. And this is why most people could not see them going down, as much as it did. Okay, now looking at 2022, you have two expectations that we have to pay attention to. You're going to have expectations of more supply and expectations of lower demand. You're going to have those together. I'm going to explain what I mean, as I believe there are a lot of catalysts that could bring on expectations of lower demand and expectations of more supply. And the first one, in my opinion, is a Republican Congress. We don't know the results of the elections yet, but I think we all know that Republicans are more pro-oil and gas, and they are not as much with the climate change and the whole ESG type of stuff, which is actually good for the industry in general, and is good for the people so they don't have to, suffer a lot of high gas prices, which is it's not good for anyone, in my opinion. It's also good for your companies if you own any stocks and energy cost goes down. Now, there's no way Republicans are going to bring that much supply in 2023, maybe not even in 2024. But expectations of this alone, in my opinion, could affect the price of oil in the short term, at least for 1 to 2 years. I'm not talking 5 to 10 years from now, because we don't even know what's going to happen. What if we have a Republican president in 2024, and then you have a full Congress, and then good luck having $150 oil? I don't think it's happening, in my opinion. And then, those stocks like ExxonMobil are going to have to retrace to a much lower multiple, despite them having a much lower multiple, which is what happened with them. It was 1 or 2 PE. People were saying it should be at 10 or 15, and then the stock just kept going down. So we can't just look at that stuff without paying attention to expectations, at least in the short term. Okay. The second one, in my opinion, is the Ukraine war ending. I'm not saying that oil is trading high just because of the Ukraine war, but I think we all agree that it has something to do with it. The same thing with fertilizers. I don't see fertilizers stocks and prices being sky high even after the Ukraine war, and we could have some kind of negotiations at least between both parties. I hope it ends in 2023, but I don't know. I'm just speculating. But we have to agree that if this happens, that could be another catalyst of investors thinking there could be more supply of oil, and this could bring down the price of oil, at least in the short term. Okay, the third one, which I believe is not as important, but it's very important, is expectations of lower demand. I believe 2023 is going to be the worst year for demand, for the recession, for everything. Even if central banks start cutting rates in 2023, it's not going to be an immediate effect. So 2023 is going to be the worst year in terms of demand destruction. And the global recession, I believe we're going to have a lot of things breaking. And those things alone, again, could bring expectations of lower demand in the future, which could also put some strains on the price of oil. Now, there are a couple of things that could make my entire analogy wrong. The first one is OPEC cutting production as demand goes down. But again, we also had OPEC in 2008 and oil still fell 80%. So we cannot just say, OPEC has our back and then we don't have to think about any bearish case. There's always a bearish case for everything, even though the likelihood may not be as big as it is. But again, it's still a bearish case, and we have to factor that into our position sizing, into our thinking, so we don't get surprised like everyone else when such things happen, and I don't like getting surprised. The second one is the strategic petroleum reserve floor that Biden is going to buy at 60 or 65, therefore oil is not going under 65 or 60. Well, if everyone thinks that, in my opinion, I just personally believe the opposite is likely to happen, and maybe Biden is not going to buy at 60 or 65, dollar oil. Maybe he's gonna change his target to 50 or 40 whenever it goes to 60. So to sum up the video, I believe oil stocks are going to underperform in 2023 before making a massive move like people talk about the supply dynamics and all those things about the good fundamentals that you keep hearing. I think there has to be a very big flush first. People have to give up on energy stocks. They have to maybe not want to touch them again for some type of reason, and I believe it could be demand destruction. I don't think energy and oil are just gonna keep going up in a straight line. Now, of course, they could, and it hasn't been a straight line. It was a little bit of a bumpy ride, but I think there has to be something really big that's gonna happen first before oil ultimately makes the really big move and outperforms everything for the decade, as people keep talking about. I agree with this, but I believe sentiment is too bullish in terms of energy stocks, and everything looks pretty much perfect. No one even is talking of how can you be wrong going energy. And in my experience, when this whole thing happens, we're typically at the end of something, at the end of a big outperformers, where we have a big flush down first, and then fundamentals matter again, and then we go back up, and then we make the big, decade move that people are talking about. So I laid out a case for oil. If oil crashes in 2023, I don't think you should be surprised, because I don't like being surprised just like other retail investors when, something happened, because I look at the bullish case of the bearish case. And of course I can be wrong, and I don't mind, or I'm not scared of being wrong. And I don't only talk about something after it happens. I like to think about what could really happen in the future, because that's really where the big returns are made. And if I'm wrong at the end of 2023, I'm gonna review it and talk about my mistake and what I learned from it, because I don't care about being wrong. Okay, so I hope you enjoyed this video. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.